What is up, everybody? Welcome back to Bitcoin and Markets. Happy Friday. Hope you guys are doing well out there. I today just want to do a Friday hangout. I have a few topics. They're kind of all a mishmash of what I've been seeing out there on the internet, but we're going to go through that. First one up. Let's just dive right into it. Let me pull this up. Headbanger for the ages. Here we go.
There's no intrinsic value to this asset. No intrinsic value to this asset. What? No intrinsic value to this asset. What? No intrinsic value to this asset. Okay. No intrinsic value to this asset. What? No intrinsic value to this asset. Currency is locked. Currency is locked. Currency is locked into the specific number. If currency is locked, currency is locked. Currency is locked. It can't be used for trade. If currency is locked, currency is locked. Currency is locked into the specific number. If currency is locked, currency is locked. Currency is locked. I'm sorry, that's not viable. The people who really like Bitcoin are convinced that it's the currency of the future and that a decentralized ledger is the way to go, and that anything that is controlled by a government entity is by definition a negative, and if it's done by the private sector freely, it will be better. And that's just not how currency works. Currency is a method of exchange, store, of value. Currency is a method of exchange, store, of value. Currency is a method of exchange, store, of value. Currency is a method of exchange for trust. Currency is a method of exchange, store, of value. Currency is a method of exchange, store, of value. Currency is a method of exchange, store, of value. Currency is a method of exchange. This asset. If currency is locked into the specific number, you get monetary inflation. The coins on a whim. If currency is locked into the specific number, how is that different from that we have at the Federal Reserve? There's expansion, except for the point that there's no accountability. Well, by default, that means it can't be used.
All right. That was hilarious, guys. I just like how Joe, during the actual clip, if you watch the actual clip, Joe just walks him down, just lets him, gives him enough rope to hang himself in that. Negative value is what Peter Zion said, that Bitcoin should be negative $1,000 because of the environmental impact. And I like to see Peter Zion getting pushed back on for some of these things. Like I said in recent streams, and I've said on the Telegram, that I disagree with like 75% of what he says, but the basics of the geopolitics and the geography, the effects of geography and stuff, we should be able to look at somebody and listen to their arguments and discard things that we know to be not true or that we don't agree with, and accept or listen to the things that actually have some value. So I do think Peter Zion has stuff to say. And what's bad is that people will throw out everything that he says because of stuff like this. So it's funny, it's hilarious, I love it, but unfortunately it's going to turn people off to listening to a lot of what Peter Zion says. And I think it's very important to understand geography, to understand the different value of the natural topography and how that goes into macro and economics and things like that. So I hope people don't discount everything he says. But okay, let's go over to the next one. And this is Jerome Powell.
Expect that the process of getting inflation sustainably down to 2% has a long way to go. The labor market remains tight, although improvements in labor supply and a gradual easing in demand continue to move it into better balance. GDP growth in the third quarter was quite strong, but like most forecasters, we expect growth to moderate in coming quarters. Of course.
Here come the protesters.
Okay, thank you. Thank you very much. Thank you very much. Yep. Thank you. Just close the fucking door. Close the door.
Oh, that's going to go down in the history books as well. That was super, super funny. For a long time, I've been saying, like on FedWatch, back on Bitcoin Magazine and with CK, and we would listen to Powell speak and hear the words coming from the horse's mouth and making our own judgments on things, not listening to others tell us how evil Jay Powell is or how all he wants to do is crash the economy and he's a bankster and all this stuff. I'm not saying that's necessarily 100% wrong, but you just listen to the words he was saying. And I said long ago that he was a straight shooter, especially compared to Janet Yellen. When she spoke, you could tell she was telling lies, that she was fibbing to you. And Ben Bernanke, he was hard to watch because he was just so pompous, where Jay Powell is much more of a straight shooter. And I said that long ago. And now this video comes out and it fits that perfectly. I think people were saying, oh, Jay Powell is, at least for today, Jay Powell is based. Well, maybe you've been reading him wrong the whole time. Maybe you should check your assumptions at the door and, approach these things as a blank slate. It's very, very important to do that because people get wrapped up in their ideology. They get wrapped up in the first thing that clicked for them way back when they started learning about money. And what's great about this is that most people don't do that. And so the first time that they learn about money, they find Bitcoin and they fall down the rabbit hole of Bitcoin. But other people, maybe this is why older people have trouble coming to Bitcoin, because they learned about money in a different way. Like maybe they learned about money back in the 60s and 70s, and there was inflation and there was all this XYZ. They saw the growth of checks. They saw the growth of credit cards. They saw the growth of online banking and everything. So they've learned about money in different ways. And as you get older, then you have to completely switch your tone. And just like people are stuck in the wrong way of thinking about the Fed, the wrong way of thinking about a credit-based system, are those same people back today, so those are Bitcoiners today, are the same way that others are stuck in their 1980s visions. So anyway, I think that's very important. Speaking of that, let's go on to the next one here. This is Danielle DiMartino Booth. I've liked some recent stuff she has put out. We're going a little bit back and forth in the Telegram. Somebody brought up her recent interview with Lacey Hunt, who is a very educated economist, and I like his work a lot. But that she was great in that interview. She was also interviewed by Blockworks a few weeks ago, or maybe a month ago now. And what she was saying, I didn't have any problem with. But now, this quote right here, I have a big time problem with this. So let's go over what she says. And this is an example of how people can't change their thinking. They're stuck in the way that they learn this. So Powell didn't want to upset the apple cart. 1 week later, financial conditions loosened appreciably. Things like Bitcoin have gone haywire. Nothing like easier financial conditions. Stocks up, yields down, like catnip for Jay Powell. So a lot of people are starting to think they're going to raise again. Let's go to the FedWatch tool real quick. Share this tab. CME does this. This is based on Fed funds futures and what's priced in. It was down to like 84% yesterday, I saw, and it's back up to 90%. So this can move pretty quickly, but it's over 90% of no hike in the next meeting in December. And we'll also get a new summary of economic projections, I think, in December as well. So we'll get a new dot plot, and we'll get a new, some new charts and stuff from the Fed of what they're expecting. And I bet you they take out that extra hike that they had on the last one. So anyways, let's get back to Danielle. And so, okay, this is the part. Conditions loosened appreciably. And what does she use as an example that conditions have loosened appreciably? She says Bitcoin has gone haywire or gone up a lot. This is the inflation narrative. This is what is the dominant narrative in Bitcoin. Of course, we are not going into an inflationary period. We are going into a deflationary period. So why would Bitcoin be going up if it's not, conditions have not loosened, they've tightened. But Bitcoin has gone up. See, if she is only using that Bitcoin can go up in inflation, then she has to reverse logic that conditions have loosened. Same with stocks up. She has to reverse logic that into why stocks are up. And I saw another tweet today from Tom Luongo, and he had all of the indices, stock indices from around the world, the FTSE, the DAX. There were some others in there. And they're all down on the day, big time, like 1% down, while US stocks are 1% higher. So see, there's much more to why stocks move up and down than conditions. So conditions can be getting tighter, but it's overwhelmed by maybe a flight to safety into US markets versus European markets. But it's also, stocks are a flight to safety, guys. Stocks are a flight to safety. Not necessarily every stock in the S&P 500, but Apple, Microsoft, the Magnificent Seven, those are definitely a flight to safety. And that's one reason why we see them outperforming. So many people try to use the performance of the Magnificent Seven to say it's rigged, or to say the stock market isn't really as healthy as it looks because of this is all Magnificent Seven movements. The big guys are moving the most, have the most gains. And that's true. But there's a reason for that, okay? It's called asset price inflation. As credit becomes tighter, not looser, tighter, people don't start a business. They don't spend money out there in the economy. They plow it into their savings, into their 401ks, into their retirement accounts, whatever. They plow it in there because they're defensive. And of course, a lot of it will go to the big guys, as well as the big guys are able to raise money through either issuing their own bonds or borrowing it directly from the big banks and stuff. So conditions are tightening, but who benefits in that? The Magnificent Seven, and they go up. So we just talked about Bitcoin going up is not necessarily an inflation play. It could be, but it can also go up in tighter times, in deflationary times, in credit risk times. And then stocks up, the same thing, okay? And yields down. Now we get to the yields down piece. Yields down mean that people are fleeing into safety. Demand for the safe and liquid assets are going up because conditions are worsening. They're tightening. I wrote on Telegram when we were kind of discussing this earlier. It's very hard to kind of talk about this because I don't think anybody has a good description of it. But one thing I came up with this morning is quality versus quantity. Okay. In good times, it doesn't matter what they do. In good times, they can print, they can issue a bunch of treasuries, and the supply of treasuries can go up, but it doesn't matter because the market is liquid and happy and it can absorb it. The quality is good. All right. The quality of the economy is good. So the amount of issuance, the amount of money in the economy doesn't matter. It can be absorbed and used profitably. In bad times, when people are fleeing to safety, then the quality is bad. The quality of the supply is bad and demand's going down. So you need to think of money supply and the financial system, not in a quantity way, like what's our national debt? 33 trillion. Oh my God, the quantity is so high. What's the Fed's balance sheet? 8 trillion. Oh my God, the quantity is so high. It's, that's a quantity-based linear argument. But what you should be considering is the quality of the economy, the quality of the supply, the quality of the demand. So she's stuck in a linear world where she thinks that financial conditions have loosened. And when all of these things that say the exact opposite, yields down means they've tightened. Stocks up, in this case, can mean tightening. And so can Bitcoin going up can mean tightened conditions. All right, so that's all I have to say about that. Let's go on to this story out of Zero Hedge by the best macro author, Tyler Durden. Oh, man. I remember when I first found Zero Hedge, I think they started just before the Great Financial Crisis. I think they were like around 2006, 2005, maybe. Let's see what their About page says. Does it say when they... No. But that was real close to when Fight Club came out. When did that come out? Like 2000 and... Was that about 2001, 2002? So it wasn't too many years after Fight Club that Zero Hedge launched, and I think it's a great author name. I want to say I read somewhere that Tyler Durden, this author for Zero Hedge, the main people, there's like a group of 4 or 5 of them. And of course, we don't know who writes what. But okay, let's get into this. Stocks tumble, yields surge after catastrophic 30-year auction stops with biggest tail on record as foreign demand craters. Foreign demand, that's the important part of that headline there. Complete disaster. We'll see about that. That's the only way one can describe today's 30-year auction, which many expected could be challenging after a mediocre 3-year and a subpar 10-year auction earlier this year. When was that? When was did they mean month? So a mediocre 3-year and subpar 10-year auction, like in February? What does that matter this year? They must have meant this month. But nobody expected this. The bond priced at a high yield of 4.769%, which was below last month's 4.837%. Okay, so just listen to that. 4.7 this month, below last month. So yields are going down month over month. Auction to auction, prices are going up. Yield is going down. And just shy of the April 2010 high. But more importantly, it tailed the when issued by a whopping 5.3 basis points. Oh my God, 5.3, which was, well, terrible, because as shown in the chart below, this was the biggest tail on record going back to 2016. On record going back to 2016. So it's not the biggest tail on record, just going back to post GFC times. So the bid to cover was just as bad, 2.236. So that means there's 2.2 times as many bids as there are treasuries on offer. So if this was, does it say how much it was total? Let's just go with, it was like 40 billion or 50 billion or something like that. So let's say it's 50 billion. That would be what? 110 billion in bids for this. So it's always overbid. But even though this is 2.2 times overbid, that it's still the lowest since December of 2021, which isn't that long ago. That's only 2 years ago, post COVID, right? And yeah, it's still over 2% or 2 times. The internals were even worse as foreign bidders, indirects, tumbled from 65.1% to 60%, the lowest since November of 2021, which is 2 years ago again. And with directs taking down only 15.2%, banks, dealers were forced to set up and take the balance, or a whopping 24.7%, double the recent average of 12.7%, the highest since November. Okay, again, 2 years. So all this on record talk, all this terrible chaos, and all this stuff is just like in the last 24 months. Okay. This is the big warning flag. This is a big warning flag because every time we have seen a surge in dealer takedowns, some sort of Fed intervention, QE or otherwise, has usually followed, and we doubt this time will be different. Okay, well, we're expecting Fed intervention next year, right? But let's take a look at this chart. This is very interesting because the red is the foreign buyers, okay? Indirect bidders. The red bars. And they're going up. So this, I think this starts in 2008, but I could be wrong. It's so small, you can't see what the date is. But it's been going noticeably higher. The indirects taking down of the 30-year. I thought nobody wanted our debt. I thought none of the foreigners were buying our debt. But look, since 2008 till today, it's gone way higher of foreigners wanting our debt, bidding for our debt. That's the first thing. Second thing I want to talk about is that these primary dealers, what is going to happen? Well, first off, primary dealers are required to participate. Like they said, they're in the piece. They don't say that they're actually required to buy a certain amount, but they're required to participate, and they're expected. That's where I kind of looked up some of the verbiage there. They are expected, quote unquote, to cover their share of whatever is needed. But I don't know if that's like any sort of legal requirement to actually take up this stuff. But anyway, they're buying very low here, right? What's going to happen in recession? The Fed will intervene, like they say, when what happens? Recession, crashing of yields, soaring of prices. So these primary dealers, they just bought up a bunch of supply. And when the yields come crashing down, they're going to be able to unload it onto the market at huge premiums to what they bought it at. This is going to be huge for these banks. But anyway, okay, let's go back and see if there's anything else. This was another chart that I saw in here that I was like, okay, so what? So November 3rd, we had this big crash in yields. And today or yesterday, they had a big spike in yields, but back to the same price, roughly, or back to the same level. Now, does this look like chaos? Does this look like there's some big time problem in the market? No. I mean, yeah, it might be the worst auction in a long time, but guys, it's a blip. Zoom out. Go to a weekly chart. Nothing happened. Nothing happened in here. They have that chart. Let's see, what else do I want to look at? That's about it from this article. Okay. Now, what could also explain some foreign demand not being there? So this article kind of paints it as a drop in demand for U.S. debt. Remember, nobody wants our debt. That's what we're told. And so any sort of thing like this, people jump on and say, foreigners don't want to buy our debt. But actually, what happened? Well, we have this story out of the Financial Times. Ransomware attack on ICBC disrupts trades in U.S. Treasury market. So it might not have been that people don't want U.S. debt. It might have been that they simply could not trade because they are suffering from a ransomware attack. Chinese bank says it has contained a hack that affected some fixed income and equity transactions. The ransomware attack on the financial services arm of China's largest bank has disrupted the U.S. Treasury market by forcing clients of the Industrial and Commercial Bank of China, big, gigantic bank, Industrial and Commercial Bank of China, to reroute trades, market participants said on Thursday. The Securities Industry and Financial Markets Association first told members on Wednesday that ICBC Financial Services had been hit by ransomware software, which paralyzes computer systems, blah, blah, blah. To prevent the attack prevents the ICBC FS from settling Treasury trades on behalf of other market participants, according to traders and banks, with some equity trades also affected. Market participants, including hedge funds and asset managers, rerouted trades because of the disruption, and the attack had some effect on Treasury market liquidity, according to trading sources. So they had some effect on liquidity, like maybe the 30-year not getting the proper demand profiles here. I mean, I think that's a pretty good explanation. Notice on the ICBC-FS's website on Thursday evening confirmed that it had, quote, experienced a ransomware attack that resulted in disruption to certain financial services systems starting on Wednesday. ICBC-FS said it had contained the incident by disconnecting and isolating affected systems. I could just see them yanking their Ethernet out, like trying to get these computers isolated. That's a funny image. Adding that it was, quote, conducting a thorough investigation and progressing its recovery efforts, okay, with the help of information security experts. It had successfully cleared U.S. Treasury trades executed on Wednesday and repo financing trades done on Thursday, the notice said. ICBC FS operates independently from the ICBC in China. It added, and neither the head office nor the New York branch of ICBC itself were affected. A Treasury Department spokesperson said, "We are aware of a cybersecurity issue and are in regular contact with key financial sector participants in addition to federal regulators. We continue to monitor the situation. This is a large party on the Fixed Income Clearing Corporation, so it is certainly a major concern and potentially impacting liquidity of U.S. Treasuries," said an executive at a large bank that clears U.S. Treasuries. The Fixed Income Clearing Corporation handles the settlement and clearing of U.S. Treasury trades. Still, other Treasury market experts noted that traders often have relationships with several banks, so trades were successfully rerouted elsewhere and executed. Correct. But you lose some efficiency, right? You lose some efficiency on the books and the high-speed trades that they're doing, bidding, however they're bidding on those auctions, but I'm sure there's connection issues. You get a marginal difference, and that marginal difference can then affect this huge change. So anyway, that's all I have for this Treasury story. Let's go on to a Bitcoin story, being Bitcoin and markets. And before I do this, guys, if you're watching on Rumble or YouTube, like, comment, subscribe. I'll check the comments here before we end today's stream. And on Twitter, I don't think I'm broadcasting on Twitter, but follow me on Twitter at Ansel Linner. Also, the Telegram, my Telegram guys are holding it down. That's our main community. So check out t.me/Bitcoin and markets. We're going back and forth all day long on there. And they ask me if I sleep. So there's a lot of stuff going on, even in the middle of the night sometimes. Okay. Bitcoin supply tightens as tsunami of institutional demand looms. Once again, by the genius Tyler Durden. Enthusiasm towards spot ETF approvals and what that means for wider adoption has prompted a resurgence in demand for cryptocurrencies, with Bitcoin and Ethereum soaring this week. Puke. Cryptocurrencies, Ethereum, Bitcoin's still over 50% of the what's it called? Dominance, Bitcoin dominance, which is kind of crap. Obviously, we all know this, that the dominance index is crap, because if I issue a silly token with 1 billion, right, of units and just wash trade a few thousand units, then they calculate the market cap at 1 billion or 2 billion or something. I mean, it's ridiculous. But even with that, despite that, Bitcoin is still over 50% of that certain metric. Bitcoin is, I would say, 99% of the signal at all in this space. I'm trying to think of what some other signal would be. Maybe stablecoins. Stablecoins could be, Tether is at least 1% signal. Maybe you could even say Tether is like a 10% signal in this space. Bitcoin then 90%. And that mirrors exactly what we're doing here, okay? Bitcoin is taking on the dollar system. Tether is a dollar derivative. Tether versus Bitcoin is the heavyweight battle. That is what is going to go down. All right, Bitcoin has erased all the losses from the Terra stablecoin crisis. So let's look at this chart that they have here. Very nice. Here's zero hedge. Yes, going back to this level, I've been watching some of these resistance levels. We'll look at a chart. Actually, let's do that right now. Let's go and look at the chart. I was looking at BITO, the futures ETF, because there was a bunch of volume that just came onto this ETF. But all right, let's go to this one and have up my lines. And you can see this dashed line. Let me make it solid so people can see that a little better. That solid black line is the weekly close from way back in January of 2022. Sorry, January 2022. This red line is like the support, where this resistance has turned into support, where I expect if there is any sell-off, we'll find support around 32,000. I don't think we'll ever get there because, 33,000 is a very high or very low risk to reward trade at that point. It'll get bought up way before it gets down here to 31,000. But if it does, guys, that is a very low risk to reward. So, okay, we're breaking out of this channel above the last line of resistance is what I call this black horizontal line. And it's going higher. Okay, let's get back to the zero hedge story. So that's their chart. And Ethereum is back above 2,000. Puke. They aren't above this resistance, though. You can see definitely on the Bitcoin chart. Bitcoin is higher relative to the bottoms back here. So let me make this bigger. Bitcoin is higher relative to the bottoms in early 2022 and mid 2021. Now, if we go back to the Ethereum chart, where is it? Oh, God, zero hedge. Ethereum isn't even at yearly highs yet. Maybe they barely broke yearly highs, but they're still well below this cluster of resistance from early 2022. So they're at a less favorable position on the chart than Bitcoin relative to, price structure from previous price movements. So, okay, let's continue. After the ETH BTC cross found critical support. I mean, this is kind of crappy charting, but yeah, I can see that. This support from 2020, though, I mean, I don't know. I don't chart Ethereum very often, and it just looks like a sick dog every time I do. Okay, let's read some of this. So financial institutions have been relatively slow to get into digital asset markets. But as regulatory clarity improves, That's about to change according to many industry participants. Okay, let's see who they got. Who's the expert that they got to talk about this? Quote, 2024 literally is going to be a year of institutional adoption. Primarily first through the Bitcoin ETF, which will be followed by an Ethereum ETF, said Mike Novogratz. Total scammer, altcoin maximalist, Mike Novogratz. As institutions get more comfortable, if the government gives its seal of approval that Bitcoin is a thing, you're going to see the rest of allocators starting to look at things outside of that. And so money will flow into the space. Now, I've read, and I tried to go back and find it, but I think it was from JP Morgan, but it might have been Fidelity or something. And they had a statement out maybe a year or two ago, and they were talking about the demand from their clients. And almost a direct quote from that statement, and I wish I could go back and find it, but it was like, they said 99% of the demand that they have from their clients is for Bitcoin. And I bet you it's the same. I mean, they look at Ethereum. One, they don't want to understand it. So they're not going to say, okay, well, what's so cool about Ethereum? They're going to be like, oh, look at this chart. It's too confusing. Some people are saying it's a scam. I'm not going to be involved with that. Bitcoin, really, nobody says Bitcoin is a scam. BlackRock likes it. Larry Fink is telling me that Bitcoin is a safe haven asset. So I'm going with Bitcoin. That's how I see it. According to Novogratz, a Bitcoin ETF will bring a measure of institutional confidence and a significant amount of funding to the Bitcoin space. Quote, this ETF is giving us all breathing space, putting life in the system. I don't like this argument. I don't like people saying that it's all about the Bitcoin ETF, because it's not. This is the Bitcoin cycle. We're actually kind of behind schedule in my estimation. You know, news doesn't move market. I mean, it can move intraday markets, you know. But this type of news and the leaks and the rumors, they're just letting the trend go. You know, a little bit of resistance was let off and Bitcoin spiked, but it's not because of the news. Now, when this ETF gets approved, there's going to be a lot of demand and people are, you know, the price is going to go higher. But that is a function of the fundamentals of the system and of money. It's, you know, the ETF being approved is not an economic fundamental of how Bitcoin works, like a monetary fundamental. Bitcoin's monetary fundamentals are what drives the things like the ETF, what drives the demand out there. So anyway, that brings in capital that allows the rest of the stuff to flourish. Yeah, scams, brother. You're talking about scams, man. You want the capital come in so you can scam some people. So you can get a Terra Luna tattoo. I wonder if you still have that on your arm. Dumb money. This is not dumb money, okay? By the way. So the people plowing money into Bitcoin ETF, yes, will make profits for other people. But it's not going to bring in a bunch of speculators to buy shitcoins directly. So this is not dumb money. This is smart money coming in. They're going to stay Bitcoin only for the most part. There will be profit to be made, obviously, trading profit. And that trading profit will be rolled into shitcoins, and there will be some pump and dumps. But this money is not going to be, you know, the big flood of money is not going to be directed towards shitcoins. It's going to stay Bitcoin only. It's just the shitcoiners and the people that are selling these scams, they're going to make a little profit and start trying to scam people again. So this is going to allow Novogratz scammers to flourish. But I think if you look at the Bitcoin long-term plan, it's on target, and that's true. What else? All right. Interestingly, as Cointelegraph reports, the potential influence of an Ether spot ETF was also brought up during the investor call. Galaxy Digital CEO said it's possible approval might not be as well received as a Bitcoin ETF, given that Ethereum's validating model is based on a staking model and staking yields. Quote, unless they can figure out an ETF, unless they can figure out an ETF that actually passes through the staking rewards, it will be kind of a subpar product from just owning Ethereum with someone like us and having it staked. Great point. That is a great point. Somebody was saying, I saw on Twitter, that these are going through, some of these might be going through in Canada, and Canada's model is that 50% gets, I think it was it 50% gets sold off? They're going to stake it, and 50% gets sold off of the dividends, quote unquote dividends, and 25% goes to the actual fund itself. I mean, this brings up a lot of questions. It brings up a lot of fiduciary questions. Are you managing this money and pocketing this stake, these dividends from your customers? How is that living up to your fiduciary duty? There's a lot of questions around this. Novogratz is already seeing confirmation of his views on adoption as institutional buying appears to have started, as we highlighted, blah, blah, blah. Initial market data suggests that market activity was heavily institutional, with four main indicators. One, in October, we saw approximately 437 million inflows into Bitcoin exchange traded products. Okay, so the ETFs, the futures ETFs in October, 437 million. And I like how they talk about BTC. How much went into Ethereum in October? Because didn't they launch in September? Like October 1st or something like that? So how much went into Ethereum? I bet it was 10% or less of that went into Ethereum ETFs. On a weekly basis, BTC-based digital asset investment products led the largest single week inflows into Bitcoin funds since July of 2022. For the week ending 27 October 2023, BTC-based funds accounted for 90% of the total. Okay, there we go, 90% of the total. So, right, like I said, let's look at this chart. So this is weekly Bitcoin asset flows. Over 300 million coming in. That's a huge, huge candle there, or bar, whatever. Okay, number two. Most noticeable change was on CME, where Bitcoin futures open interest notched to an all-time high of 20,369 contracts on the 25th of October. And 6 of the top 10 open interest days for Bitcoin futures occurred between 20 and 27 October. Total open interest on CME hit 3.58 billion on 30 October. In October, CME surpassed the 100,000 BTC mark for the first time, overtaking Bybit and OKX to rank second behind only Binance, all right, for open interest. Very, very interesting. So, this is institutional money. They're going to be coming into CME. They're not going to be putting money onto Binance and doing that. I mean, maybe some family offices might do that, but not the big institutional players. All right, what else we got? Number 3, in addition, the open interest across BTC options also reached an all-time high of 15.4 billion on 27 October. Very nice chart there. On-chain activity remains muted relative to the rest of the year, with daily active address count of 1.1 million. All right. Interesting. Novogratz and Goldman are not alone. Dan Tapiero, founder and CEO of 10T Holdings, expects a torrent of institutional inflows in a run-up to a U.S. ETF approval. So this is also a first mover advantage for Bitcoin. Just like we saw on the Ethereum futures ETFs, no one cared. There was, I think, 6 or 7 launched. And I think on the first day, not all of them had volume. It might have just been a tiny bit of volume on some of them. But when I saw a chart, like on the first week, I think Eric Balkunis had that on his Twitter. And some of those products didn't get really any volume at all. But Bitcoins have all had huge volume because it's a first mover. By the time Ethereum comes, it's Johnny come lately. Real facts driving idea now rather than hope. Real facts driving idea now rather than hope. That's a bad sentence. As CME BTC futures open interest surpasses Binance in the #1 spot. Torrent of capital from the traditional world about to hit. At the same time as the demand side of the Bitcoin space looks to be accelerating, the supply side is tightening. As the block reports, the circulating supply of Bitcoin. So look, crypto space here and supply of Bitcoin. Stop it, guys. You're scammers. The circulating supply of Bitcoin is historically tight, with coins held by long-term investors at an all-time high, according to Glassnode. The data found that existing Bitcoin investors are becoming increasingly unwilling to part with their holdings. Right on, brothers. Come on. With analysts at Glassnode observing impressive rates of accumulation taking place. Atta boys. Good work. The Bitcoin supply is quite tight, with several measures of supply, such as illiquid supply, coins hodled, and long-term holder supply at historic highs, said Glassnode. Okay, some charts there. Additionally, Glassnode analysts highlighted that, quote, the liquid supply metric, which measures the amount of supply held in wallets with minimal history of spending, is also at an all-time high of 15.4 million Bitcoins. So the amount of supply held in wallets with minimal history. So it's new demand coming in, or there's more economic activity. That could be also just a measure of economic activity. It could be also a measure of coin management as well. So, all right. The analysts added that the spending behavior of short-term Bitcoin holders has changed following BTC's rally above the key $30,000 level. Quote, the recent rally suggests that a shift in market character has taken place now that the market has rallied above the key $30,000 level. Analysis of investor cost basis for various cohorts suggests that this $30,000 level is an important zone of interest for the bulls, the Glassnode analyst said. Finally, circling back to demand, Eric Anderson, Global X's senior digital asset research analyst, concludes in a recent op-ed at CoinDesk, while institutional allocations to Bitcoin have faced myriad roadblocks through the years, the foundation being laid today signals a shift in the winds, incremental gains on the regulatory front, maturing market infrastructure, a growing number of institutionally viable investment vehicles, and a deeper understanding of the value of Bitcoin are all leading institutional investors to take a fresh look, promising a potentially transformative Bitcoin landscape ahead. Of course, I had to cut out all of the garbage crypto and crypto assets and all that stuff. But yeah, so very good points there. We made a ton of gains. That makes me think, while reading that, I was thinking of all the regulation back and forth that are happening in the United States and probably around the world. I just, the ones in the US make the headlines that I see in English. So that is going on all around the world. I think Bitcoin is just too entrenched to get taken over. All right, let's do one more thing. Sharing a screen of the Bitcoin price, 37,349. Let's take a look at some other charts here real quick before we sign off. The 10-year had a big day yesterday, but a little bit in the red today. Again, these type of movements, the path is downward. This bottom has been broken. The structure has been broken on the yields. It's most likely going to go down. I wouldn't be surprised with a slight rally, but I would be surprised by the end of the year. It's not significantly lower than it is now. Okay, U.S. oil. Big day today, but still way below. I mean, just looking very ugly. And finally, the stock market, huge day today. This is not a bullish engulfing, really. Maybe let me see this. Now, this is a bullish engulfing on the futures, S&P 500 futures. Once again, bringing back the rally. Stocks up, baby. Stocks up, Bitcoin up, oil down, yields down. That's what we're doing here, baby. Okay. Let me go to my website. I didn't even bring that up in the beginning. Bitcoinandmarkets.com. Check it out. The latest here, massive breakout or fake out. That is the premium content that I put out yesterday. You can get my free weekly newsletter. Comes out every Monday if you sign up here free for a free account. If you support me on the website here, you can enter the price forecast competition. And that is just guessing or forecasting the price at the end of the month, the end of the monthly candle, I guess, with a candle close. And the winner gets $20 in sats over Lightning. That's kind of a fun little competition we do. All right, so that is that. Let me go and check and see if we have some comments here. If you're on YouTube or Rumble, you can make some comments. I hope that they pass through on the chat here, on my chat software. Dex Invictus. I think you watched Fed Watch there. I remember some of your comments. Thanks for the comments here. Yeah, Volcker would never say that, I guess, what Powell said. I don't know. I have heard audio recordings of Volcker from back in the day, but I've never listened to him or read him from this perspective that I was just talking about earlier, from Powell versus Yellen versus Bernanke. Powell does seem like a straight shooter, and this outburst that he had, or hot mic moment, humanized him, I think, to a lot of people. And hopefully people maybe take a second look at what he's saying, and what are the narratives they're believing out there. So that's very interesting. Okay, let me take a look at Telegram. And if you guys have any comments here. Okay, a question from E says, was the Dave Ramsey clip on Telegram recent or from a few years ago? I assumed it was recent because I just saw it on Twitter, so I assumed it was recent. But yeah, that's a good point. Maybe it was from a few years ago. I don't watch his show, so I don't know if his set, you could tell by the set, and the way that they have their messaging on the screen and stuff, if you could tell if that was new or old, but I assumed it was from very recently. And Tony says he doesn't think Dave Ramsey's opinion has changed regarding Bitcoin. Yeah, that's true. I think it's been the same for a long time. He refuses to look into it. All right, last check of the comments. Nothing. All right, guys. Well, thanks for joining me, and I will see you on the next one. Bye.